So, big idea. Let's talk about Bitcoin. Corporate strategy for Bitcoin. If you want to maximize shareholder value, you want to preserve or create shareholder wealth, then you can either work on a balance sheet strategy for Bitcoin, or you can work on a P&L strategy for Bitcoin, or you can do both. The balance sheet strategy for Bitcoin is convert your fiat cash flows, your treasury, into Bitcoin as much as you think you can. Second, convert fiat derivatives into Bitcoin. If you have investments in stocks, bonds, real estates that are denominated in the fiat currency, which you expect to weaken, right? You won't be protected over the long term, because if you have a stock which is going to generate $1 billion worth of pesos, and the peso is going down by 99%, the stock is also going to depreciate in the same way. So if you're a corporation holding a treasury in cash, you convert it to Bitcoin. If you're holding a treasury in stocks, bonds, real estate, or other cash derivatives that are valued based upon cash flows, you would also sell those, convert those into Bitcoin. You could issue debt in dollars, and then you can convert the dollar proceeds, the fiat proceeds, into Bitcoin. This works, by the way, in pesos. It works in euros. It works in any currency. You in essence issue debt in the local currency, and you convert it into the strongest monetary asset, which is Bitcoin. You could also issue equity, right? If you've decapitalized your company, if you're running with a very thin, if I'm Apple Computer, instead of issuing $100 billion of debt and buying back $100 billion of stock, maybe I issue $100 billion in equity, and I buy $100 billion in Bitcoin, because if Bitcoin is appreciating at 200% a year, and you're investing in a company that's growing its cash flows at 20% a year or 10% a year, it's dilutive to the shareholders, right? You want to actually invest in the thing that's appreciating the fastest. And right now you've got 10 years of history of Bitcoin appreciating at 200% a year. If when you decide what you're going to do, you have to consider, is your forecast 100% a year, 50% a year, 20% a year? What is the appreciation rate you're going to forecast? I think that it's very reasonable to expect that a strong money asset is going to appreciate at the rate of money expansion, plus with an additional driver of technology utility and technology diffusion or adoption, with a third driver, which is just broad-based network adoption. And all of that gets you to a number which is in excess of the expansion of the M2 money supply and the cost of capital. So convert your cash derivatives, and then issue debt, and then issue equity, and then if you can, finance your future cash flows, or convert your future cash flows directly into Bitcoin, right? These are all balance sheet strategies you can pursue, depending upon what your balance sheet looks like and how financeable your company is and what kind of access to equity or debt lines you might have. Every company on earth can do that, right? Every company has some amount of treasury and assets. And if you're highly levered, right, you can issue equity to get less levered. If you have no debt, you can issue debt. And if you have debt that's invested in something, you can refinance it. So the balance sheet strategy applies to 100% of companies. What about the P&L strategy? Well, P&L strategy consists of the following ideas. Number one question: can I build an open product powered by Bitcoin? And can I build a product powered by Bitcoin? What does that mean? Well, let's say I have a mobile payment application like PayPal or Square. If I allow you with one click of a button to convert 10,000 US dollars into $10,000 worth of Bitcoin, I've created a mobile app and it's plugged into the Bitcoin monetary network. And of course, I'm going to give my customers one button to convert a $10,000 liability that's going to depreciate in value by 15% a year into a $10,000 asset, which is going to appreciate in value at 100 or 200% a year. That's a product powered by Bitcoin. Now, what is it? What do I mean when I say open or closed? If I allow you to buy a whole Bitcoin, and I also allow you to take custody of the Bitcoin and transfer it to a hardware wallet or to a different custodian, it is an open system, open product. And I might very well get 100 million new customers that want to buy a Bitcoin on my mobile app and move it to another custodian. Coinbase has an open product powered by Bitcoin. What about closed product, closed system? Well, what if I actually let you click the button and buy a Bitcoin, but you can't move it off of my product, off of my mobile device? That's closed or proprietary. Okay, well, on one hand, it's less appealing to people that want to be able to take custody of their product. On the other hand, it would be more appealing to the shareholders of your company, because if $100 billion of Bitcoin gets purchased on your mobile app and you can't move it off of the mobile app, you become a bank with $100 billion worth of permanent capital. If you have a business model that generates a 1% fee, then you're going to get 1% of $100 billion. And you're going to get it until your customers exit that relationship. And if you have a closed or proprietary system, they would have to sell the Bitcoin and pay capital gains tax to exit. And that might be, if the capital gains tax goes to 45% and you have $100 billion of capital tied up in your mobile app, then your customers will have to incur a $45 billion tax in order to exit your mobile app. So that's kind of customer lock-in.